What's going on, traders? This is the Supply and Demand Trading Podcast. In this podcast, we're going to be talking about risk management. I know the rule of thumb, people say 1%, 2% of your account, but I kind of have created my own different idea behind my risk management, and I think some of you might find it interesting. So stick around for that. We're going to be talking about that. So we're going to be talking about how I manage risk. I'm also going to be giving you guys an example of some risk management I was using this week while scalping and trying different things out this week. So, I think this should be a pretty interesting podcast. So, all right. So, some people say 1%, they want to risk 1%, and that's the rule of thumb, and that's completely fine. I have nothing against that at all. I think that's a good rule of thumb as well. But something that I've kind of created when I first started trading and still kind of do today, look at your bills per month or per week and then find what you're comfortable risking, right? Like, let's just say you put $5,000 into account, but you don't want to risk 1%. You don't want to risk that whole $50 because that's still, it's a lot of money to you, and that's completely understandable. So you don't have to risk the full 1% of your account, in my opinion. Like, you can find, what I did when I first started was I'm working. I found out what all my bills were, and then I found out what I had left over, and then that I would implement into my strategy of what my. So let's just say I have an extra $100. Let's just say I have a $5,000 account. I have an extra $100 a week after all my bills are paid for. If you want to risk that full $100 trading, that's fine. That's something, it might be more than 1% in your account, but at least you're taking into consideration your bills and all that stuff, right? So let's just say you have $100 total you want to risk every week trading. You could split that up, right? If you're a swing trader, you can maybe look for 2 trades per week max, $50 risk each. And after that, you're out. That's more than 1%. Or if that's too much for you, let's just say you want to take, you can literally get so creative with this kind of risk management strategy that I've come up with, just by finding your bills, finding out what you're comfortable losing every week. Because when I first started, I wasn't comfortable losing 1% of my total account's value, even though it's only 1%, right? I still was I'm a pretty frugal kind of guy, so I was kind of like, I want to maybe come up with a different type of risk per trade. So that's kind of what I did, and I think everybody should kind of do that too. You don't have to, if you want to risk 1%, that's fine, but you don't have to risk the whole 1% or 2%. You can come up with, let's just say you have a $5,000 account. If you want to risk only $20 per trade, maybe take 2-3 trades a week, that's totally fine. It should all depend on what your bills are and kind of what makes you comfortable losing. I don't always think it has to be 1%. I think that's kind of misguided. It's a good guide, right? Like, it's a good, like, oh, you don't want to lose 1% of your account. I totally agree. I never risk more than 1% anyways, so I still go by that. But then I kind of have my own custom risk management strategy going on, right? So that's that as far as risking per trade, right? And once you get the hang of trading and you see the setups that you like, I always switch up my risk, right? If I'm doing a swing trade, long term trade off of a big good level, then I might risk a little bit more, or I might risk my full amount, whatever, right? If I'm scalping or day trading, I'm probably going to be risking just a little less. A good example is this week so far, I've been waking up early and I've been trying to scalp using the 4-hour, 1-hour, 15-minute, taking my entries on the 15-minute. And then I've also been trying something out on using the 24-minute as a curve and then entering on the 1-minute time frame, which is something pretty new to me. I've never really tried that before, and I'm just trying stuff out, right? So yesterday I took 3 losses. One of them was a higher time frame trade, so I'm not going to count that. But I took 2. So I'm trying out the 24-minute and the 1-minute time frame. I'm looking for 1-minute confirmation inside 24-minute higher time frame curve level. And I've never tried that before. The spreads get pretty wacky, so I'm only risking literally like the smallest amount I can. I'm not going to give a dollar amount, an amount where I don't care if I lose it. Obviously, I care, but it's nothing. It is like 0.05% of my account, not even like way less than that. So I've kind of been taking trades like that. I took 2 losses yesterday, just trying out the 24-minute and the 1-minute confirmation. And those 2 losses, they didn't bother me at all. It gave me the experience that I was looking for. I'm still going to try it out. I don't mind losing if I'm trying something out. I'd rather lose on a real account a very small amount than be paper trading, because if I'm paper trading, I might not be taking the trades that I am. So I'd rather just be trading a live account with extremely small risk where I still have some skin in the game because I got real money involved, and but if I lose, I'm not losing too much. So that's a good example. I'm trying something out where, like I said, I'm on a 24-minute, looking for 1-minute confirmation, but what I'm trying to do is I'm trying to hold for 5-to-1 moves plus, where I'm making 5-to-1 minimum. I've seen opportunities where it might give you like a 15-to-1. Like, I know it sounds crazy, but like it can be done. So that's kind of what my strategy is. I'm trying to practice right now. So that's a good example of how I'm just lowering my risk. I'm using risk management, because risk management isn't just, oh, I'm going to risk 1% on every trade, and I'm not going to lose more than 1%. It's about adjusting your risk to what you're trying to do. And maybe another example of risk management, like the markets are crazy right now, right? Zones are being blown through right now. So maybe if you're swing trading, you want to just be having your risk. I know a lot of guys that have just taken half of their money out of their account. They're only risking half now because of just the volatility, and that's risk management. Risk management is not just what you're going to risk every single trade, right? So yeah, so that's something you can do if you're trying a new strategy out. You're going on a smaller time frame. Just risk whatever you're comfortable with. It doesn't have to be 0.5% or 1/4%. It could just be like $5, $10, whatever your account is. If you have $1 million account, that might be $1,000 to you, right? Like, there's no dollar amount. I'm just giving a dollar amount just for an example, right? Like, put $2 on the trade just so that you have some skin in the game. If you make money, you make a little bit of money, whatever, right? Like, every dollar counts. Um, so yeah, that's just another example. I know guys who do long-term position trades, and then they'll risk like 2% on those because they're holding for a longer term. They want to get more value out of that for holding longer term. So that's another form of risk management. But as far as what I do, I just find out my bills, what I make at work, and that's what I think everybody should be doing too. And if you just want to risk 1%, that's fine. Like, there's nothing wrong with that. But if you're trying out something new, you're scalping, whatever, risk less if you need to. Like, risk whatever you feel comfortable with. Like, there's nothing worse than being in a trade where you're like, oh, I risked too much on this one. Like, yesterday I took those 2 losses and I was watching it, and they both worked out pretty good, right? I was telling you guys I was looking for that 5-to-1 move minimum, and they both moved like 2, 3-to-1, and then they came back and stopped me out. But I wasn't really, obviously I don't want to lose, but I wasn't really stressing about it at all. Since I was looking for that 5-to-1 move, those bigger moves, these bigger risk to reward moves, putting a lower size on helps me not mess around with my stop loss too much, because when I'm taking other trades, I'm like, oh, I want to bump my stop up now. I'm already at 2-to-1. I want to lock in some profits, and like, I'm trying not to do that as much. I'm trying to hold on to my winners more if the higher time frame curve is allowing for, if it's giving me that profit margin that I want. So yeah, that's pretty much all I have to say about trading or risk management. I'm going to be doing a video most likely pretty soon about how I like set up my trades, and how like using the tools on TradingView, and how I set up the trade, and how I bump my stop losses up and all that stuff. So I'm going to be doing a video on that very soon, as it was requested from a couple guys from the Facebook trading group. So that's pretty much it. If you listen this far, I really appreciate you listening. Maybe give it a thumbs up if you enjoyed it. And like I said, stay tuned for that video, where I'll kind of be showing you live examples of how I manage my trades and manage my risk while trading. So thanks, guys. I appreciate it and hope you enjoyed. Take care.